Hi everyone, Darko here for your weekly video. First of all, I want to thank you so much for your love and support. Our podcast just reached 170,000 downloads. And if you haven't had a chance to listen to this episode, I highly encourage you to do so. It will probably save you a fortune. On my LinkedIn account, I had a post for some days ago about Aussie Swissy. And that specific post, got lots of attention, so I want to make a video out of it. This I will show you the charts, and the questions that you need to start ask yourself is, what's my bias, long, short, or actually sideways? Is price correcting itself, or is it in a continuation mode? Okay. And what is the previous candle action on a monthly chart, on a weekly chart? What's the daily chart doing? And also, what's the 4-hour chart doing, your entry time frame, etc., etc. And by the way, if you want to get these posts, make sure that you actually follow me on LinkedIn. Send a friend request or a connection request, as it's the correct name for it on LinkedIn, and I will be more than happy to have you as my on my contact list. So let's cover this in great detail. What I see in here is we always start on with the monthly chart. Okay, so what I see is I have identified these swings. Okay, this is how I see these swings, and I also see that price actually breach this swing in here, breach this swing in here. We are making higher high, higher close. We hit a level of resistance. We have a neckline in here, a neckline in here, actually also a neckline in here, so 3 necklines. And how do you identify a potential correction? Well, there are candlestick action formations. In this case was an inside bar that everything started with, and obviously I have a price action reading school where I actually go through the correction move explained, also the importance of the the yearly candles and everything you need to know about the candlestick formations, how to identify potential reversal in the market, weekly candle closes, daily candle closes, monthly candle closes, etc., etc. These are very important information for you to grasp before you can actually see some nice juicy results within your trading. So price is correcting itself in an uptrend on a monthly chart. We hit the level of support. This is a significant neckline. We have I actually did a very specific pre-market analysis only on significant necklines yesterday. So we have this level that is actually tested on both ways. Okay, if that was not enough, we are also at a weekly significant neckline. Okay, and we need to see what is the previous monthly candle action. Well, it doesn't help me that much right now because the previous was slightly bullish, and now we are at support. So I'm very eager to see how this monthly candle will close, maybe even the next one. Okay, the previous weekly candle is bearish, so that's like against the bias that I'm looking for, which is long, and the daily advanced market flow is still down. Okay, so the lowest time frame I go to is actually my 4-hour charts, and there are several options to take this to attack this pair. One of them is to, obviously, depending which pattern are you trading. I'm trading set and forget, ACATs and swing break rotation. So I don't have an ACAT, I don't have a swing break rotation. What I do have is a set and forget. Okay, so option number 1 is you actually take this trade in here, okay, with a low stop loss, aiming to the upside, because we have some background space. Price closed this level deep enough to use as a natural stop. Okay, and then price goes up, convincingly reestablish, and could probably come down into this level with a low stop loss, aiming to the upside. Option number 2 is that you wait for a clear swing break rotation. Okay, either a swing break or rotation or an ACAT, depending which patterns you are trading. So what I will be looking for is, beside this potential trade, is that if price comes down, obviously it will stop me out for a full loss, right, or a reduced loss. It depends how you trade manage. And then from here, price closes very bullish, either on a daily, weekly, or we get a swing break. And then if that happens, then this level will become the entry again with a low stop loss, aiming to the upside. That's how you start all of the whatever you are trading, if it's stocks, indices, commodities, Forex, it's the same approach. You need to start with a monthly chart, identify a correction or a continuation mode, wait for a significant neckline to get hit, and look if that level is also a weekly level. Look for candle actions on monthly, weekly, and then you go down to your entry time frames. Depending, if it's only a monthly level, then my entry time frame is a daily chart. If it's both monthly and weekly, then my entry time frame is the 4-hour chart. It's very hands off, no stress involved. You have plenty of times to plan these trades and everything. So yeah, this is on my radar. We have several other stuff that is on my radar as well for this coming days and weeks, and let's see how things go. Thank you so much for listening. If you like this type of videos, well, encourage me to do more. How do you encourage me? Well, hit the like button so we get better ratings on YouTube and on social media, and then I will be encouraged to do more of these free video. It doesn't cost you much, just it's just a thumbs up for you, and that means the world to me. Thank you so much for listening, and until next time, take care and stay safe. Cheers.